Aloha everyone, Joshua Hayes at BigWaveTrading.com. All right, we're making a weekend video here. So let's go ahead and start off with the SPY, as I always like to do. I always like to look at the overall market, and sure enough, we are hitting all-time highs. This confirms all of the long signals that I continue to receive on an end-of-day basis. Action is heating up intraday with the kind of low floaters, or massive volume, low price stocks that I follow intraday. So everything is looking good. However, I want to make it very clear here. Look at the V-shaped manner of this rally. And I just want to remind everybody, when the market makes V-shaped moves, it's suspect to very quick and rapid corrections. V-shaped moves are never ever treated kindly, usually over the long run. We still have an open gap between 10.10 and 10.11 that's there. And even though we finally saw above average volume on Friday, there's not enough volume for me to think that this is a pro or breakaway gap higher. That being said, daily, I always trust these indicators. They have been back tested extensively along with my real-time trading using them to be able to trust them. M trend on a daily looks fantastic. Time segment volume on a daily looks fantastic, and we're starting to get separation on a weekly. We are finally green again on the SPY, and M trend looks good. But I will remind everybody, obviously, with another V-shaped low volume move, with that open gap, we need to expect in the shortest term that the market is probably still going to remain volatile, back and fill. And remember, the quote easy money is made when my monthly time segment volume is positive, especially whenever the M trend is moving higher with it. You can see here that on a monthly time frame, these are the times that I really like to really load up and go just like push it on margin, like at 5, 20, 10, 20% of my account value per the long signal that I like right here, this is it. But right here, this leg here, this is whenever I really start to juice my returns. Same right here. Same right here, and as you can see on a monthly basis, we're still negative. So keep these charts in mind as you move forward. When the monthly, if and when, we're still probably months away, does turn higher, holy moly, each time frame supersedes the other one. So if this one turns higher, and then you have a weekly that looks like this, and then especially if there's a daily look like this, guys, I push it. I find as much margin as possible, and I throw it at the market in the signals that I've always used to make money on, which we're going to go over along with a couple of losers. But before I move on, I want to look at the market from one other perspective really quick. So I like using TradingView for that background color with my time segment volume. It does not exist here with Telechart version 18. So we're going to go through each of these indicators really quick and just show you what I see out there that just shows me that, why I'm a little bit nervous about this market. Actually, I probably should have lowered them all. My sincerest apologies, everybody. So we know what the SPY looks like. I mean, we're not, we've already showed you. We can see here the gradual uptrend line connecting the recent highs, and then the short-term uptrend line. I talked about that open gap that's here, something that we can't see here. Let me bring up the volume bars. Notice that last push higher is on below average volume, so that's the problem. So looking at this index here, you can look at the time segment volume, and if we pull it out, you can see there's negative divergences on each of these highs. It's problematic. And look at this most short-term V-shaped move to highs, negative divergence. So I like that it's positive, but this is why I'm worried. Not worried, I'm never worried, but this is why I'm open-minded to backing and filling to potentially do this gap, because we have negative divergence on this indicator. We're going to look at them all. We have negative divergences on this RSI indicator. Oh, Telechart, you're not making things easy, are you, in this video lesson? Let's just do this. Do that, and then do this. So you can see on the RSI indicator, you can see here we move higher, short term, higher highs, but this indicator going the wrong way. So once again, negative divergences, and like I said, it's everywhere out there. So now we're looking at the MACD line. You can see I've drawn the lines. We move higher, make higher highs, but this indicator does not confirm, still making lower highs. More negative divergence, keep an open mind to a pullback. And then the last one we'll look at is the stochastics. It's ever so slightly, but still negative divergences. But don't forget, overbought can stay overbought longer than most shorts can stay solvent. So that's the market, and that's how I see it. Bullish intermediate to long term, but short term, those negative divergences, that open gap, that V-shaped move higher. Let me show you the Russell 2000. There's the relative strength to the S&P 500. That downtrend line that I drew last week is still in effect. My favorite markets are whenever it's moving higher, no matter what kind of time frame it is. In 2017, though, as you can see, when we had the really good market that I showed you with the SPY, the Russell 2000 still wasn't really doing any kind of positive divergence. But I tell you what, if we can ever get this indicator going on an uptrend basis, like look at the weekly here in 2003 to the 2007 highs, if and when this market, the IWM, can ever lead the S&P 500 and break this downtrend line, woo boy, I'm excited for what the potential future holds, especially when all of my macro data indicates this rally should continue as long as nobody decides to mess it up. And by nobody, I mean the Federal Reserve, President of the United States, Congress, whoever it may be. It doesn't matter. But for now, things look good. But as you can see via these indicators that I've shown you today, they're not perfect. So just expect a straight shot higher. Seems a little foolish to me. But if it happens, great. Price is all that matters to me. I'm fully invested in my end of day account. I'm starting to get more aggressive in my day trading accounts. No problem. I don't fight price. Price is all that matters. All of this is just data and information, but price is my only go-to indicator. And I should also make notice, look at the V-shaped move up here into the resistance area in IWM. We should definitely expect to see some headwinds before we can finally see any kind of tailwinds and move higher. That being said, nice moving average setup. So with all that out of the way with the overall market, I do have some new long positions for Monday that I'm giving to members, but I do not like the setups. They're earnings winners. They have a higher short float. They're trend join signals, but they're not safe. And I have given out a couple of long signals lately. They're not really working that well, obviously, with an overbought market. So let's go look at Telechart version 7 for those names. So I think recently IPHI I gave out publicly. As you can see, it's an earnings winner. It's a trend join using this final low right here as a stop level. IPHI has not triggered because it gapped up. And when it traded back down and through 72.08, I then called on the order. It has not triggered yet. It tried to at the end of the day on Friday, but it didn't trigger. Order is still live and outstanding. But as you can see, I'm not buying this off support, right? This is a trend join signal. The same with SHU. SHU, another earnings winner, trend join signal. I did get filled, hence the white arrow here. So I am long SHU. But the recent long signals I've given to everybody, CPRT, remember my entry was back here, but I've added to my position. As you can see, it's not really blasting off higher, is it? It's kind of having a little bit of a rough go of it. So, working, but not working, still not triggering any stops or losses yet. I did say that if you are aggressive and you do use the uptrend lines, you would have been knocked out of this name. So you would no longer be long CPRT, but since I'm already long, stop, 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 stop on CPRT. The other one I believe that I've given out publicly is OSIS. This trade is still good and live, but has not triggered yet. Remember, it has to trade up and through 102.01. It triggers at 102.02, and that becomes my limit. Good to cancel buy stop limit order 102.02. Stock hasn't failed, hasn't triggered yet. But these kind of earnings plays, like the SHU, the IPHI, all these extended names, these are the only kind of names that are really giving me signals right now. I'm not getting a whole lot off support, which tells me that the market's extended. So going to pull it back. I'm not too confident between the long signals. I explained in detail to members why I'm going to give it a shot, what I want to see the stock do, what I'd prefer it to do, and we'll see if it works, yay or nay. Let's go ahead and now jump to the losers before we look at the winners from Friday's session. CLCT was a new long position. Golly, I cannot remember, but I added to it or took a new long position because I got completely shaken out of this name at some point back here, right here. I went ahead and jumped in with this signal. It was a candle over candle, slightly above average volume. If it would have been below average, wouldn't have taken it. uptrending bop. CLCT was in my perfect speculator scan based on the book by Brad Kodeshwar. So it's good to go. And initially, while it didn't work out immediately, and immediately knocked me out a half by moving below here. This is where half of my good to cancel sell stop was. This is where the final part was. So I'm already out a half immediately, just 3 days later, because it triggered and filled the very next day. It then started to move higher again, and everything was looking fine and dandy, even from the long signal, and heading into Friday, less than a 1% loss, but I guess earnings took it out. I don't even know. All I know is that this is why I love sell stops. Once it traded below this day's low day at 27.25, it was triggered at Interactive Brokers, and I'm out. That being said, if you're a working professional, day trading seems to be so popular and everywhere on social media. But it's amazing to me because if you're working a 9-to-5 job, what do you do in trying to day trade? My methodology is for those that do not have a lot of time. I give you my exact trades that I'm taking the next day. I give you my exact good to cancel buy stop limit order, and I tell you where to cut your losses. I may be spreading myself out thin everywhere right now, but I can do that. The rules are always the same. 5 stocks, 20% of your capital each, which I believe is very dangerous in this market. 10 stocks, 10% each, which is what I recommend always. Up to 20 stocks, 5% each, if you can handle it. Within an era of $0 commissions, you can cut half your losses or all of your losses at 0% loss if you want to. So you don't even have to hold to a loser. But let's say you were working on an end-of-day basis. What's the loss? CLCT from this ad signal? It's right around 12% from right there. So that would be this would be what I consider a very large hit to the account, similar to HVT when it gapped down on me. But with CLCT, I was already partialed out, and there was also another entry signal some point here. But now that I'm out, the white arrow's gone. I cannot track it. That then takes us to KNSL. Nasty day on Friday. After this day, I still had a small position left in this name. I had to stop back here, my final stop, because the initial entry was all the way, where is it? That doesn't even look right. I cannot, right here. That's exactly where I got in. Shouldn't have removed it from the system, would have made it easier. KNSL, cancel quality, perfect speculator quality, triggered and filled the very next day. I'm long on 5-1, and as you can see, worked out immediately ahead of earnings. There's a reason whenever I buy long ahead of earnings, works out more times than it doesn't. When it doesn't work out, I get a HVT. When it does, I get a KNSL. This happens more often than not because there's a series of checklists that I go through before getting long these names. But bottom line is, I don't hold stocks that look like this anymore. So even though my final stop was all the way down here, and it still would have been for profit at 81.45, I'm now moving my final stops, all of them, to 1 cent below this low day right here at 86.87. But trust me, as it cut through all these, I was taken out with stops here, here, and here before it did close a little bit higher. But still, what if KNSL would have sold off all the way down to 60? That's why I love good to cancel sell stops. So with CLCT, you see a big loser. Why do I have it written down as negative 3%? I am so confused by what I've done here with CLCT. I think it's because, where in the hell did I get that first position? Oh my gosh, I don't know. I don't know. As I make this video, I don't know. Shouldn't have removed it from the system, then I would know better. But this is the kind of stock that if I am long and it's got a big uptrend, back in the day when these things used to really trend for long periods of time, my final sell stop was always the 200-day moving average. Those days are gone. This is a stock I would never hold, so my final stop is there. That now takes us to all the winners. So we've looked at KNSL. You know what? That is correct. KNSL was the entry here. I've got these things backwards. 29% gain. CLCT, 3%, negative 12% loss. So keep that in mind. 29% gain because of a proper entry, a bad beat in CLCT. This was my worst performer on Friday, negative 12% loss. Now, let's look at all the winners. Following Friday session, STKL. I think I've gone over this stock before. Don't really want to spend too much time going over the entry zones. Just know I'm always looking for the same thing. Hammer candle off strong price support like this one. Candle over candle. Heavier volume, above average volume, heavier above average volume. my BOP indicator confirming, and I check multiple things. RSI, TSV, blah, blah, blah. I go through them all. But the bottom line is STKL, 43% gain from an entry. Game plan drawn out before I even set my orders, so you can all front run me. And if there's more orders than shares to get filled at the price level, you all get them. I don't get them. But STKL, 43% gain. BLDR, here's another one that hit new all-time highs in my account following Friday's session. There's the white arrow following the day of entry. Another 43% winner. That's only been a little less than 4 months. Just moving down the line here that I wrote down. FLXS, right here's the entry. Already been taken out of half of it as I put half of my profit target here. Same with STKL. STKL, I put a 50% of my profits here at the 50-day moving average. So if you're still long, you have more gains than me. My next target is here, followed by right here, because I want to give it, since the 200-day moving average is straddling these two levels, I'm already out of half, right there and right there. So moving back on to FLXS. Where's my next profit target on FLXS? This high of the day right here. So for right now, whatever I have left, 50% goes right there. Still, with this one, in a very short amount of time, 20% gain in less than a month. Not too bad. CAS was a recent new long entry. There is the signal here. Normally when you see a bar like this, I don't get filled because normally it goes through the high of the day very rapidly and it passes my stop and limit level. Fortunately, got filled on CAS. 8% gain in 1, 2, 3, 4 sessions. Not bad for a methodology that you don't have to babysit all day long. You can go live your life, work, do whatever you want. You don't have to be at the computer all that day. SPWH, you guys should be familiar with this one. We keep going over it. 64% gain. Oh boy, that's nice. This used to happen all the time. Not anymore. Post 2008. 2 months, 64% gain. Quite nice. M&K, 32% gain in 1, 2, 3, 4, 5, 2 weeks. Not bad. EHTH, here's a stock I bought ahead of earnings. Very, 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 very risky. Whew, paid off. No harm, no foul. And like I said, there's a checklist I go through that includes looking at the float and other market technicals that I'm not going to get into. That's for members only. But 22% gain in a very short amount of time. And there's more. AKRX, this is the biggest winner from that hammer candle off the lows with other indicators confirming. 90% gain in under 2 months. My God, why can't they all be like that anymore? Why can't they all trend so nicely? If you want to also, something I haven't been doing, going over these, if you want to draw an uptrend line on any of these, this really helps keep you in a position if you go with size for all of these. We'll do this for the rest of them. TDOC, you see where I went long here. This day almost knocked me out of all of it. I put my final stop right here. The next day doesn't trade down and through, so whew, still long TDOC. 24% gain, and once again, just draw that uptrend line. If you want to go in size and really, really try to ride it higher, that's what you do. And then one more, just one more, because that's it. SPAR, my favorite one, because I've added to this position a couple of times following its initial entry back here, hence the white arrow. Earnings winner. This is why I trend join some of these stocks. But when you trend join some of the stocks, initially, because they are extended, they have to consolidate before they run again. That's what SPAR did. From this date, though, of entry to where we're at now, 55% gain in under 4 months. I love it. And once again, if you ever go size in these, there's your uptrend lines. I always recommend draw an uptrend line and hold on to that position until it closes below that uptrend line. But if you look at all those, there's a common theme with a lot of these. I always look at short float, like TDOC. I think if my memory serves correct, that was around 35%. AKRX is like around 10%. EHTH was around 15 to 20. M&K is 50% plus. SPWH was 15% plus. Some of the other ones aren't, but like for SPAR, SPAR is in my cancel them quality list and in my perfect speculator scan. When a stock is in both of those scans, whoo, I really, really like it, and that's why I give it a shot, even when it's extended on an earnings win like IPHI. Cancel them quality, perfect speculator quality. All right, guys. Hey, if you enjoyed the video lesson, do me a favor. Give me a like, a retweet, a share. If you have any comments or any questions, please let me know. I answer everything as soon as I possibly can. I'm busy this weekend, but if you leave me a question, I guarantee I'll get to it within an hour or two. All right, everyone. Have a great rest of your weekend, and I'll see everybody in the chat room at bigwavetrading.com Monday morning. Aloha.